After several years of growth in excess of 10%, car sales in Russia shrank in 2014 as the economy weakened because of Western sanctions over the Ukraine crisis and a slide in oil prices. The ruble also tumbled last year, making consumers think twice about large purchases as manufacturers look for new ways to cut costs. In January and February, we saw a fall in sales, and it is becoming more sharp. In January, we saw a more than 20% fall. We saw a 38% fall in February. And March is not over, but we continue to see that sales are difficult. And I think we have not reached the bottom yet. In mid-March, General Motors announced that it will shut its Russian factory and wind down its Opel brand in the country. The American carmaker said it would stop production by the middle of 2015 at its St. Petersburg plant, which will mean the loss of 1,000 jobs. Following the announcement, protests were held in the city. About 1,200 people will lose their jobs. Other car manufacturers in our cluster in St. Petersburg, including Ford, suspended production. Nissan suspended production too, and that means that the salaries of their workers will fall. The Russian Economy Ministry says it expects the domestic car market to return to growth in 2016, something which experts agree with. Our forecast in general is that the market will rebound, and we expect that it will reach the peak level of 2012, when the sales were at their highest, over the next 5 years by 2020. This is a long-term forecast. Opel says it sold 912 vehicles in Russia in February, an 86% plunge from last year's level. The company has raised prices several times to cope with the weak ruble, which fell more than 40% against the dollar in 2014.